Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some charts. Not a lot going on here on the risk side of the spectrum, on the BTC side of the spectrum. And that just means alts also very likely have nothing going on as a group. Any given day, any given alt can be up 20%. I don't care about that. Not important to me. So as a group, it continues to feel like just not the place to be. And depending on how legacy markets tip higher or lower, there's still probably some additional downside for crypto. And if we look at ETF flows for BTC, haven't seen much inflow for many weeks now. So that helps set the tone in the bearish direction. Same thing with ETH. Not a lot going on here. Not a lot going on here. You know, people sort of grasping at straws at any given week that's positive. You don't want to have to guess, right? It's either a hell yes or it's a no. This was hell yes. This is no. Same thing with BTC. If we aren't positive, I'll just say 500 million plus in a week, probably irrelevant generally. And Ripple, slightly positive, Solana, slightly positive, but collectively, those two aren't going to move the needle and certainly are fairly irrelevant for sentiment. So unless BTC turns the corner, very unlikely that alts do anything at all. So that's flows. Flows, bearish. Let's look at positioning. Positioning is still bearish. We have commercials increasingly short here since the breakdown. Not what you want to see. On back testing, again, I have to say this every time because somebody comes and says XYZ reason it doesn't matter. Back test it yourself. See what's positive. See what's positive for price. It's black and white, right? This is not what you want to see for bullishness. Can price go up anyway? Yes. Can price have a few days of bullishness? Yes. But this means miners are hedging, miners are in trouble, or miners think they're going to be in trouble. When this flips, coupled with TA, very powerful signal. We are not there yet. There's nothing here. Now, there may be some low time frame stuff on BTC on the 4 hour, but we've struggled to get above 70. And if we look at hash ribbons, this is another thing that still says we are in trouble. This is not bullish. Again, you can say one leads, one lags. I don't care. You know, it's comments like this. Price tracks hash tracks price, whatever. Doesn't matter to me. Here's what I know. I know that when hash ribbons are red, we tend not to go up. So until hash rate turns around, until hash rate bottoms and hash on the 30, 60-day moving averages turns green again, it's going to be hard to go up. So that's positioning for BTC. Positioning for ETH continues to be bearish, right? Again, visually just backtest this. Historically, when commercials are in the red on net, price has topped and gone down. When this flips, coupled with TA, great signal. Not seeing that here. A lot of resistance on positioning for ETH. And for BTC on low time frames, again, yeah, there's maybe some trades to take here, but I don't really care. Doesn't really matter to me. There's a 70 to 70 something trade on a low time frame 4 hour. Sol, same deal, but so far we've been smacked down. This is still no questions about it. Bearish. You want to see something like this? Price above cloud or a pattern preceding that? We have neither here yet. Last time we tried that, we got smacked down. Okay, now we try again. See what happens. On the crypto cloud 2061, 2030, 89 is the level. And that takes us probably into Q2. It's either 89 today or cloud coming way down to meet price, which is the dream, the ideal situation, because then your entries are lower. If we look at TYD at the very last chart of this video, you'll see exactly what I mean. When you just grind out this trend and flatten out for months, that's what you get on TYD. So keep that in mind for the end. That's sort of what you're looking for anything, really. And MSTR, you know, I hesitate to post stuff like this because people, I think, get hopeful who are just super underwater. But this is the type of thing I'm watching for over the next couple of months. Not soon, next couple of months. This is still very bearish MSTR, very bearish trend. Not quite anything here on high time frames, but maybe into April. We'll see. You know, again, ideally, the perfect scenario is we do nothing, we crash into the cloud, and then you get your triggers, letting this bottom over time, and then you get your 145 to 235 on the daily. But we haven't been in the cloud on MSTR since July, October, briefly. So this continues to be trend bearish. It might be bottoming. That may take 2 quarters, right? But this setup is still a potential for MSTR. ETH also, again, nothing. Just flat out nothing. There's nothing to do here. Nothing to say. Needs time. I got nothing. Sol, same deal. I got nothing, needs time. And the bearishness here is reflected in legacy. When we look at the SPY, this isn't trend bearish yet, but it is at risk of breaking down. It is at risk of making lower lows. Now it could just do nothing in perpetuity here. For months, it could just range. The range traders are loving it. I don't know who those people are, but they're loving it. For now, this remains okay. This remains okay. Under the surface, there's tons of names that are down 20, 40, 50, 60%. So it's kind of miraculous that the SPY is holding flat. But if the SPY starts to break down and BTC is already at 68, I just can't imagine BTC is magically going to be the safe haven trade. So as a sentiment gauge, that's important. But also as a price gauge, this is important because if the market starts to deteriorate and fall apart on the SPY, crypto goes lower. It should. It's already down a lot. It'll go down more. Maybe we see a divergence eventually. Maybe we see some rotation eventually, but there's no actionability today for me on crypto. Let this break down and see what happens. Let the Qs break down and see what happens. This looks horrific. This is the exact opposite you want to see for bullishness. If you were to invert this chart, it would look extremely bullish, aka extremely bearish. There's nothing here that says long, nothing here that says we're good, nothing here that says we're going higher. We had a chance, didn't hold it, ugly range, right? And if we look at the names that are up over the past week and the past month, utilities, materials, energy, real estate, consumer defensive, industrials, healthcare, not exactly risk-on sectors. And so the question for me is, okay, what is left here that is some low-hanging fruit trade-wise that hasn't moved up a bunch that I'm already not positioned in? The utilities we caught pretty well thanks to this consolidation and cloud breakout. If things get very bearish risk, I'd expect this to just shoot up just continuously and not really give you a great entry. But ideally, this kind of gives you a little mini handle and just sort of consolidates for a week, similar to XLV. That's kind of what I'm expecting for XLU. This is healthcare. So as far as trades are concerned, it's tough to sort of want to buy XLU already moving as much as it has all the way up here. 44 or slightly below is a great entry. And these aren't massive moves either, percentage-wise, but it is defensiveness in a time to be defensive. For XLV, I think this is a better setup than XLU, just because it's already consolidated at the handle a bunch. Sort of labeled the trade schematic here. Any higher highs should be full size, not financial advice, but just how I'd be treating it, and plenty of room for upside there. And as we look at these other defensive names, they've already sort of reached their fib extension levels. I'll throw Pfizer in the group for healthcare because Pfizer certainly a laggard and looks like it's starting to break up. Is this like flashy growth momentum? No, this is just something to do while nothing's going on, where people like to trade most of the time. XLE is another one where energy's done well. It looks semi-toppy here. Hard to call this a great entry at this point. Again, 44 was a much better entry, 46. It's in the fib profit zone. If you zoom way out, multi-decade or whatever, I'm sure there's levels to think about. I would just be careful for anything that looks like that at the moment. And you can probably find stuff laggard in XLE, but even other ETFs, OIH, Oil Services ETF, similar to XLE, maybe has a little bit more to go in the near term relative to what XLE looks like. Homebuilders looks excellent here. Again, similar to these others, probably closer to XLV, where this is a great cup and handle, ascending triangle, whatever you want to call this, ready for all-time highs, ready for more. XLRE is another one. Real estate looks great, looks ready for more. Not exactly risk on, but if we're looking for stuff to do, if we're actively looking for stuff to do, it's this boring stuff like insurance. Okay, like this isn't a mega long setup here, but I do have alerts at highs in case this does start to break up for whatever reason, just because it's been consolidating for over a year up here. Then we've got XLP, which is late, but also defensive. And so you can see where people have been rotating and whether or not it's relative value or just fear of risk collapse. This is where people are going. Clearly, when things like this are just straight up, not exactly normal for consumer staples, something that's defensive to move like this. You got materials also late. Great level was 46. I'd give that some time. And industrials XLI also has broken up quite a bit and feels a bit late to me. So XLU, XLV, XHB, all those XLRE, all those look viable as trades. And then if we go to the other side of the spectrum, financials, XLF, nothing here. This looks horrific, bearish. XLK, similar to the Qs. Bearish breaking down, no trend here. Ranging, looks ready for lower. Mag 7 ETF, the best companies in the history of the world, breaking down. Bearish, looks ready for lower. Trending lower. Not a ringing endorsement for anything risk adjacent. And consumer discretionary also starting to break down. They're sort of teasing a high, teasing a lot of stuff. And that's kind of the problem here on these charts that have been consolidating for months. You can see the inverted head and shoulders attempts, but there's also these head and shoulders, right? And collectively, one of them will win. And for the moment, it looks like all of the bearish stuff is winning on the risk on names. And if we compare XLY to XLP, this is a classic like risk on, risk off, discretionary versus staples. Staples being like toilet paper and toothpaste. So that's winning right now. Toilet paper and toothpaste is winning over discretionary by a lot. And the other scary part is if you map this out to BTC correlation, XLY over XLP relative to BTC in the green, again, pretty black and white as far as what we've seen when market is defensive, aka favors staples. BTC does not have a good time. And of course, people have been, I've seen like 5,000 versions of this chart over the past week, IGV versus BTC. Another one to pay attention to. So if these correlations start to break, we can talk about stuff, right? But that's probably not going to happen until flows and positioning pick up a bit to the bullish side. It's probably going to happen after the SPY breaks down, which it looks like it wants to. So it certainly feels like there's plenty of downside risk here, and that's probably why bonds have started to get a bid. And I know fundamentally, I agree with everybody that says it doesn't really make sense for bonds to do well because we're issuing so much paper. Certainly over the long term, that makes sense. But in the near term, the technicals for all these look great. Long bond, 20 plus TLT, flipping up, 7 to 10 year, flipping up, SHY, the 2 year flipping up, and the AG also flipping up. As a sentiment gauge, not what you want to see if you are bullish crypto. We can also isolate these. This is just the 2 year. As an ETF, U2 looks great. Ascending triangle there. You've got the 25 year ZROZ trying to make a bottom here with an inverted head and shoulders. You've got other ag-like instruments. This is mortgage-backed securities. So it depends on the duration you want. It depends on your viewpoint on rates generally, but I don't think you can really go wrong in any of these names. And then of course you've got your leverage stuff like TMF. This is leveraged 20 year, and TYD leveraged 10 year. And this thing has just ground itself out for years. Now you got to be careful taking TA off of leveraged ETFs because of the fees, because of the vol drag. But if I had to pick a time between today and 2020 to try to go long, this would be the time. So I don't really see any bullishness whatsoever. I hope all the counter traders of Josh are correct, and I hope we go to infinity on the BTC side. It's just, it doesn't look like we are ready to do anything constructive in the near term. And for me, that just means positioning is greater in defensive names. Positioning in risk is lower. I just take fewer risk positions. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.